Today's environment breeds a lot of changes in real estate and mortgages. Here's 3 things that you need to know about going into buying a house right now. First thing you need to know about is programs. FHA, VA, conventional, good news. They all are the same, except some banks made some changes. I'll tell you about that. The other thing is jumbos. Jumbos are still around, but guess what? They're limited. Now, a jumbo loan is defined as anything over the county loan limit. We're about 510-ish, right around that in El Paso County, but every single county is slightly different. So you want to look to see what your jumbo limit is. Those are going to be limited. What I mean by that is a lot of banks that used to do them 2 weeks ago are no longer doing jumbos. Quick pro tip. Call a mortgage broker. They're able to shop many options for you. The next thing is non-QM. You think of non-QM, it stands for non-qualified mortgage, but what that means is it doesn't fit the Fannie Mae and Freddie Mac's box. You kind of think of them as subprime-ish, like the old subprime, where we do like bank statement loans or investor loans based off of just rents coming in, not off of actual income of the buyer, stuff like that. So those are pretty much gone. Count those out, get those out of your head for now, and just focus on FHA, VA, conventional, and some jumbo. The second thing we want to look at is not how the programs have changed, but how the banks have changed the programs within their own institutions. As an example, FHA, VA, conventional. Again, those programs have not really changed very much, but the banks have made some differences in things like debt to income ratio, where we used to be able to go up 40, 50, 65% on VAs and stuff like that. Now, a lot of banks are saying we don't want to go over 40% debt to income ratio, maybe a 45 debt to income ratio. Again, every bank's slightly different, so it's good to shop multiple banks. Again, that's where your mortgage broker comes in. Next thing we'll look at is credit score. Now, VA technically doesn't have a credit score limitation, but you know what? A lot of banks are saying lower credit scores are risky, and we can't take those risks right now, so we're going to put a cap on that, and a lot of them are coming in about 640. Now, you can still find some at 620, 600, 580, stuff like that, but 640 is kind of where a lot of banks are coming in and say, we don't want to go below that. Next thing we want to look at is interest rates. Interest rates are still really, really good right now. They're fantastic when you look at the whole big picture. However, when you look at interest rates, there's 1 or 2 things that's happening in there. The first thing that's happening is some banks aren't letting you actually lock that loan until you're through underwriting. What that means is you go under contract and you say you're going to be at 4%. Well, in 2 weeks when you're out of underwriting, or a week and a half when you're out of underwriting, where are the rates at right then? Are they still at 4%? Maybe they're a little bit better. That'd be nice. Maybe they're a little bit worse. There's no way to know. So that is a risk that we need to look at going into buying a home right now. The other thing is what they call a par rate. Par rate means, I think of golf like par, right? So par rate means you don't pay anything to get the rate, where you can buy the rate down to, from a 4 to a 3.75 to a 3.5, or you can go higher. They give you money. Well, a par rate, some banks are having a hard time issuing a par rate on some programs. What that means is it's no matter what rate you get, there's going to be additional closing costs in order to get that rate. Now, it's not at every bank, but some banks are doing that right now. Last thing we want to look at is the government has stopped orders for 4506Ts. Now, 4506T is a tax transcript request that lenders use on every single loan. So the government says we're not doing 4506Ts right now. So here's what that means. Well, first off, hooray, good news for you. You don't have to mess with it. But what if the underwriter still wants more information? My advice to you, if you're looking to buy a house, go to the IRS.gov and order your tax transcripts yourself and have those available. Okay, don't open the envelope, just have them ready, have them available in case your underwriter needs them. You can send those in. Last thing we want to look at is how the impact has changed, kind of for the good, in my opinion. One thing is video notaries. You can actually close a loan through video. Now, your bank has to approve it. Some banks will, some banks won't. As a mortgage broker, we're able to work with banks that do, but you have the option to close sitting in the comfort of your own home. It's kind of amazing, right? The next thing is, what if your bank doesn't allow you to do a video? Well, they're going to have drive up closings. So title companies, you can actually drive up. They email you the package the night before. Think of it like you go to a fast food or something. You drive up, grab your food. You drive up, they come out. They say, here's the closing package that you looked at last night in email. Sign here, sign here, sign here, and you're good to go. And finally, let's look at appraisals. Appraisals, kind of cool changes from Fannie Mae and Freddie Mac. What they've done is they've actually taken the appraisal process and said, if it's not reasonable to get the appraiser into the house, then we will allow lenders to do what's called a drive-by appraisal or other options. A drive-by appraisal is where they still do the report, but then they're going to drive by and basically take pictures from out in the car and just go home and do all the work from there, not actually go into the house if it's not safe or it's not reasonable. So it's kind of cool that we can still keep chugging along. The last thing I want to point out is these changes are across the board. Everybody's a little bit different, but these changes are across the board. Everybody's in the exact same boat. So what I mean by that is there's different precautions put into place, different safety measures put into place for both the investor, for Fannie Mae and Freddie Mac, and for appraisals and for the buyers. All these safety measures are put in place to make sure that everybody is sustainable, that this business keeps going, and that homeowners have success in owning a home.